2 out of 3 traders don't understand where to exit their positions. That means that a bit more of half of you traders listening are not maximizing your profits consistently. Seriously, are you gonna keep being one of them? In today's video, I'm going to be marking down what exactly I think is gonna be helpful for you guys. It's gonna be divided into 2 parts of the video. The first half of the video, I'm going to give you 2 tips, 2 very simple tips that you will be able to apply right away after this video, and you will be able to benefit from when it comes into exiting your trades and maximizing your profits. Second part of the video is going to consist of me breaking down the 2 positions that I took on Thursday, the 27th of June. So it's a real case study. So sell position and buy position. So you guys will see at the end of the video what exactly I was able to do on M1 when it comes into executing, and thanks of the 2 tips that I'm going to be giving you, why I was exiting the selling position intraday perspective and why I was actually buying into a bit more long term for the day. Okay, so first of all, first part of the video, the 2 tips. We're gonna start with the first tip. Okay, so the first tip is going to be called context. Something very important when it comes into understanding market structure, liquidity, intraday price action, it comes down to context. Now, why context is very, very important when it comes into maximizing your profits? Because context gives you the perspective to know where you are in the market. So when I come into H4, the first thing I want to do is to see where am I sitting, right? In this case, we can see very clearly that you're sitting on new lower lows. Okay, so by the day that we were going to be trading of Thursday 27th of June, I know price action has been moving a bit now. So June 27th, we can see that price was sitting below a new lower low or a major inducement. Therefore, our minds can already start thinking of a pullback or a retracement in time. Now, something very important to clarify here, when I have a major inducement like this one on H4, a new lower low, I'm not expecting price, or I'm not expecting to enter in price directly into M1. Okay, that's very aggressive and that will lead to a lot of losses eventually. So something that I do is I wait for intraday price action to align. But at least the first idea that I need in place is context, is knowing where am I sitting on the market, know that I am sitting on now new lower lows, and therefore I can expect some sort of major retracement of the main leg that led to that low. So of course we don't know what happened in the future at that moment, and we're just going to be trading objectively from that low into a potential retracement. Now, that's not all. That's just the context we're going to gather from a higher time frame perspective or a liquidity perspective on H4. Now we're going to start to go into more an intraday perspective, but we're still on the first tip, which is the context. So you're going to think now, why do we need this context, or why is this so important for our take profits? It's very important because something that I've realized is that we can lose a bit of perspective on our trading just by focusing too much on the higher time frame or just by focusing too much on the lower time frame, and that's why the multi-time frame is there to give us that puzzle or put things together so we can maximize things. When we go into M15, now we need to start looking at what price is saying. So when I see price like this, right, remember that I'm gonna put the Ripple buy here. We're just gonna be avoiding the future price action. We're gonna be focusing on that day, that specific day. So when I see this, right, I need to understand what's going on in the market. So what do I have? I have a low in here that was cleared on M15, and therefore now we have a push, internal break of structure, and kept leading for more price action. So now on the come up, we have a buildup of liquidity, which is gonna be relevant when I go into the second tip. But very importantly right now is that, remember what I said on the context on H4. For me to start looking for bullish price action, I need M15 to support. Now M15 is starting to support that we just made a run of liquidity of this major area on H4. Therefore, this bullishness to the upside is starting to show that we might have a deeper retracement. Okay, by deeper retracement, I mean to go into the next supply areas, all based because we don't know what's gonna be the future. We just are predicting on a high probability scenario. So we just know that if this is our main leg, and I'm starting to get these bullish moves, I know I can potentially go into certain middle areas of this price action. I'm gonna cover now then how to be specific with them, because it's very important on where to exit. Now, for the context, remember H4 already covered, M15 now we're showing that bullishness price action. So what I'm building the context is very important now to understand that I am gonna be getting, for example, certain reactions from, let me get my arrow, certain reactions from supply areas, okay? Now, what is the mistake that I see a lot happening? One of the mistakes that I see a lot happening is that we assume that just because, for the people that understand what's the Asia range, is where liquidity we know is resting on lower areas and top areas. Once we see price driving through the upside, mentally we assume this needs to flop to the downside. And this leads to a lot of error. Same to the downside. If I see a low of Asia being swept, then therefore I need to expect price to go reverse and go to the upside. So for the liquidity traders that are a bit more advanced, okay, you guys know what I'm speaking about. If you're a bit new to this, that was a short explanation. And very importantly then, it mitigates an area that for supply and demand traders that understand this area decided to break low. So that was the point that decided to break low. Therefore, you're starting to add your confluences in place. Say, okay, this supply area made a low, M15 is bearish, and therefore I'm taking liquidity of Asia to the upside. I can have a sell. Yes, you can have a sell, but this is the important of the context, which is we're still on the first tip. Until where? So when I'm adding all these contexts together of run of H4 low, M15 bullish price action, my mind is already starting to realize that yes, I can have a potential and very high probable sell, which is this red one that you're seeing on the screen. Okay, we can get this, but now where am I gonna stop, right? Because one of the main issues is you're gonna think, okay, let me take partials and then let's go for a new lower low. But the reality is there is a high probable area of reaction here that will come in a second with the second tip, where I know there's a very high chance of price reversing from there. So there is no point of you trying to maximize something that has no potential for it. It's more important to maximize it until those levels. So that is tip one, right? As I said, it builds the context. Now context for what? Because if you're able to get the exit here and you understand that this was a bullish price action and this was just a retracement, we can then target new highs. So this was just higher low, created a higher high, higher low, that created a new higher high, and therefore now we can target new areas of liquidity, okay? So now that's how you potentially, from here, if you're gonna be entering a buy, the exit is very important again, because you're gonna have to look into where should I exit my position. Without an exit position, there's no profit. So entries are important, of course, and the more accurate and precise you are, the better the entry, the better the reward. But the exits are as much or even more important, because if you are not having a true area for you to understand where price can bounce on a high probability scenario or can leave or react, you're not gonna have a clear plan to follow. And therefore, that's what I'm trying to give you today. First, the context. Second, now we're jumping into liquidity. So the second tip I'm gonna be covering on the first half of the video is gonna be liquidity. Now, remember guys, second half of the video, I'm gonna jump into M1 to dissect everything for you guys so you can understand the price action. So you'll see my sell, you'll see my buy. But for now, first half of the video, second tip, okay? The second tip I'm gonna be doing is liquidity. Now, why is liquidity now important in here? Because once you've built the context of what's going on the market with bullish price action, bearish price action, high areas of having a major inducement, which is what we got in here from this area, therefore you can expect a bigger move to the upside. That's how you can now to understand liquidity. So the next step, tip number 2, is we're gonna go now into M5 just to have a bit more of candles, and I'm gonna show you what we can build upon. So for the second tip, majorly in this video, I'm gonna make it easy. So I'm just gonna focus on 2 things that you should be looking if you wanna improve in your maximizing your profits. And one is gonna be the break and retest area of liquidity. And the other one is going to be the trend line area. I'm gonna explain both in a second, okay? You guys are following the channel, you guys know I did a strategy video just based on break retest, so I recommend you guys to go and watch it. So now, why is this important? Because we all understand that a run of liquidity can lead to a contrary move from this area to this area. But now, the context gave us the idea that we could exit. But now, where do you exit? This is the key. So you exit understanding that this selling price action was based on, look, the amount of liquidity was being built to the upside. You have an inducement for the day. Now, the inducement for the day is not going to be as strong than a major inducement, which is what we have in here. Therefore, yes, we can get a reaction, and that's what we got, but there's a high probable chance of just be trading a retracement trade from an intraday perspective. So in here, we have the liquidity being built. Okay, I'm gonna cover the entries at the end of the video. And in here, once we enter on M1 that I will show later, where is my exit? Well, your exit is gonna be determined by two areas: break retest areas and trendline traders. You can also add support and resistance traders, because you can have an example here, 1, 2, 3, 4 touches, that when we entered in here, it was very clear you were gonna take out that liquidity pool being built, that support area. But then your last take profit for the day in this sell was going to be this break and test, because this whole area is the one that starts the move down and breaks up. So there's a lot of traders that do the break test and then they're a bit in profit. But if we want truly to make a move to the upside, we want to induce these people first. So the inducement comes when you're able to take out that break retest people. I'm gonna just zoom out for a second just so you see that we truly, I know it's very, very small, let me see on the screen that you guys can see, but you can actually see how small is that wick, but actually wicks this support and resistance people. Okay, I've put this with a black area, the break retest area, just so you guys know. So I was using in this case the two tips. Sometimes it can be just one alone, sometimes it can be both of them. Okay, sometimes you can get just the break and retest area as a target that I'm going to show in a second. Sometimes you can get both, get the trendline traders plus the break retest. That is exactly where you exit, because that's already your move down, taking out these people, taking out these people. Okay, that liquidity. Now, that was for the sell, and the reason is because we were basing it, one, on context, second, of liquidity. Now we go next. So why was this a potential area to buy? Because based on the context, we knew M15, these are the higher lows, higher highs, then this was the potential higher low, because that's a high probable area of reaction. Therefore, once I show the entry later on M1, you will see that once you are on the trade, same thing all over. Based on the context, you know, higher low, higher high, higher low, you need to make a higher high. But where are you gonna exit? Where are you gonna exit? On an area that has liquidity, which in this case we can see that we were building now all in there. Okay, all these trend line traders, 1 tap, 2 taps, you see all these below that trend line is just bearish order flow going to the downside. Maybe it's a bit aggressive to put that trend line like that. We can use both, remember, trend line or break retest, or we can use one of them as a target. So when I'm gonna enter here, I need an exit. Where is my exit? Well, when I go in price here, I'm just gonna do a small break also supply and demand, just so you understand. We have an area here that lead to a push. Then we have a reaction here that didn't lead to a push, lead to a push up. And therefore, this area that broke higher in the future becomes a reaction area. It reacts one time, reacts a second time, and in that second time, it fails to create a high and it creates a low. Not only that, through the way, it actually makes what we're looking for is a break in price, a test, and just price leaves. Therefore, now the importance is, well, when are you going to run that liquidity? Because you could actually have done something like this on the moment, and therefore that area will be invalidated and therefore you will be having a sell on the moment. But because the area was not taken, that break retest liquidity, and that area is still a place to mitigate orders and close positions, and you're having this internal bullish price action in M15, the context, remember, and you're having the run of liquidity of H4, you know that based on this, if this higher low is consistent and creates a high, is going to be targeting this area. So now you have a magnet in price. I like to call it a magnet in price. It's an area where I want my price action to go in case I have a positive trade. You have a losing trade, you have a losing trade. But if you have a positive trade, this is exactly how I basically like to go for my take profits, because I know that if I am able to create some sort of push to the upside like we did, price is not likely to stop here because there's nothing here important or relevant. You'll make a move down, you'll induce more people, ends up going to my magnet. Magnet in this case, it was the second tip, which it was the liquidity areas. Okay, break retest or trendline traders. In this case, break retest. Okay, now if you look at it, you run the liquidity, and now in the way up, you've created a trendline trader. So on the trendline traders, once you run that liquidity, you target that liquidity again. So it's a constant move and a constant cycle of creating that, but I'm gonna leave that for another video. In this video, the main objective that I'm trying to develop for you guys is 2 tips to understand where to exit and maximize your profits and benefits in trading, which it was based on 1, the context, which it will take a bit more to develop. It's not as easy because you need to understand market structure very deep, you need to understand liquidity very deep. But the second tip is where to exit, what areas can become high probability of reaction. So 1 is context, second is liquidity. And the liquidity is a bit more objective because you can see a trend line in here, you can see the break and test to target, you can understand that this was London session to go down. Same here, you see the break and test, therefore you can target that, which leads also with a New York time for you to expect a reversal. So there's a few confirmations for you to expect moves from those areas. So that was basically the things that I wanted to cover on the first half of the video. So hopefully that made sense to everyone. Let me know if it was helpful on the comments. Now we're gonna jump into the second part of the video, which is gonna be dissecting that into M1, which I know you guys like. So let's jump into M1. I'm gonna see very quickly. We're not gonna take 20 minutes for this. It's gonna be a few minutes for you just to have that extra confirmation of how they enter in the market. And now we've already built the context and we built the liquidity areas, which is the 2 tips to maximize the profits. Therefore, all of you guys know where are we sitting right now on the market. So now when I see this cycle to the upside with this liquidity, this inducement for the day and that mitigation, I can see how price creates this liquidity pool. Now, very importantly, no one should be entering into, in my opinion, into areas like this where you see a reaction and then try to sell from that smart money candle, you see another reaction, oh maybe this is the one. You should have a protocol in place to enter. In this case, I use one of my protocols, which is the 2-leg protocol, and therefore we have a 1 leg and then a 2 leg. Let me remove the red arrow so you can see a bit more clear. So you have, 1 leg, 2 leg, I enter on the 2nd leg, and therefore I'm gonna target now 1, 2, and 3 areas of liquidity. Not only that, when my trade goes to the downside, it's gonna be a 4th support level reaching, which I know from a high probable chance we're gonna then take it out. That could be your first take profit, which is around a 1 to 2, 1 to 3. 1 to 2 I think it was, 1 to 3 was mitigating this area here. So you have an instant 1 to 3, and then from there it was an extra 2, 3 R, which is a 1 to 5, 1 to 6 to go here. Now, as we said, execution in M1 is very important, but where am I gonna go and get my exits? On the break test area that I mentioned, which already we run the 2 things that I said, the trendline traders, the break retest. Therefore, we're out for the trade because we know from a high probability scenario, you can be on a bullish internal flow and this could be just a retracement. Then from here, because you already took the winning position, you can be a bit more aggressive, and you know that through this reaction of liquidity, now you get a reaction on an M1 BOS in here, and therefore you can actually tap into an M2, M3, M5 candle and try to buy from here. It's a bit more aggressive, but now you build what we like to do of all these trendline traders to the downside. So now because you've taken the break retest, I know this is a bit more advanced, but I know you guys will follow. Because you've taken the break retest, now you have all that liquidity that now you can target. So now, yes, you are trading on M1. You see, I'm understanding what's going on M1, and it's very important to understand this time frame. But I am putting the context and the liquidity areas of M15, H4. Therefore, I can get a bit more of profits and a bit more of movement in the market. And now from here is the same. Now I buy here, but I target what I mentioned. I'm not gonna just target this higher high. That can be a partials area, but I know that there's a high chance of price arriving there, because if this is an M15 higher low that creates a high high, and this was a retracement, well, if it's M15 push can lead to a bit more of movement than just M1. If I just focus directly on M1 and I don't look at M15, H4, anything, well then you can get an M1 BOS, and then M1 can go to a 1, 2, 3 here, but M1 then go down. And it's fine. Like if you can assume that as your 1, 2, 3 trade, you're still gonna be or can be profitable. The point here is I'm trying to put context in place for you to understand that with this trading here, you can have a bit more of move, at least reaching these areas, and therefore getting your liquidity grab there, which leads to a bit more of holding a position over a few hours. It's not crazy holding because you're holding a position for a few hours into the New York session, but I think it's very beneficial. Okay, so now before I close this, I know there's a lot of things now to digest, but I want to leave you guys with an action plan. And the action plan on this video is going to be giving you some take profit protocols. So now, as you guys know, the two examples or the two tips that I give, one was context, number two was liquidity, break retest, and trendline traders. Now, I know for a bit while you digest everything, you backtest, you journal with 100 trades, you're gonna be practicing. So I want you guys to get a protocol that you can take now and you can actually get instant benefits. And the protocol is a basic protocol that we use for our members, and I think is very useful for everyone who's just starting, to make sure you're benefiting from getting trades and not just looking for 1 to 10s directly. Okay, so the benefit here is we're gonna be telling you to do this, which is while you get experience with one, the context, two, areas of liquidity, you should be partialing 50% of your position in a 1 to 3 every single time. I don't think it's good to close your full position in 1 to 3. If you want to do it, it's fine. That's my personal experience. So 50% of the volume in a 1 to 3, and then you're going to do the other 50% of the volume for a 1 to 10. Okay? Therefore, while you get all the information, backtest and everything, you can now live with a plan, which is, okay, all my positions that I enter, I can do 50% 1 to 3 to grab a bit of profit, 50% on the 1 to 10. Now, very important, the 1 to 3, this is gonna be fixed. So it's 1 to 3, no matter if it's an area of liquidity or whatever. That's just a basic plan that I give you while you guys are getting better with the two tips that I gave. The 1 to 10 is a bit more flexible. I say 1 to 10 because that's what usually we can achieve on an intraday session, in an intraday perspective or intra-session. Now, here is where I'm gonna tell you guys to start applying what I just mentioned. Okay, so this was instant 1 to 3, get 50% of your volume. In this one, I want you guys to try number one, the context, and number two, the liquidity area. Okay, so I'm gonna put C for context, L for liquidity areas. And the liquidity areas is gonna be the break and test, sorry for my drawing in there, and the trendline traders, so double T for them. Okay, so in this 1 to 10, other 50% of volume, I want you guys to try this. Very important. I say 1 to 10 because it's an average. Sometimes you will see it's 1 to 8, sometimes you will see it's 1 to 7, sometimes it's 1 to 12, but usually it ranges around that area if you're able to execute your entries between M1 and M5. So that's the action plan that I give you guys to follow. So hope it's gonna be very useful. I know it will be, and we're gonna see you in the next video. So remember, 1 to 3, 50% of the volume. 1 to 10, apply these two things that I mentioned on the video while you guys get better, so you can now go backtest and trade it yourself. See you in the next video.